Good morning, everyone, and happy Thursday. Okay, let's quickly start with what's going on in the markets. So, as you all know, the Federal finally started and announced its tapering by 15 billion a week to taper their monthly bond purchases, and markets took that really well because it was already priced in, it was expected, the Fed did as expected. So obviously whatever investors' positions did, whatever they held, it did actually do as pre-required. So all in all, we had the three major indices again at record highs, especially the NASDAQ and the S&P. All took it all positively. And then we didn't see any like sharp moves from the dollar and the gold. This is the dollar daily chart. We are at levels of 94 currently, and yesterday we hit a low of 93.78. We did drop beyond the support levels, but again, we're still following the sideways trend that we've been following for this past week. So there were no like major sharp moves, especially in the USD and the gold. The gold did drop quite a bit. This is the gold chart. We did hit a low of 1758. However, we closed at 1769, and right now we are at levels of 1772. So we're not really, we're going to place a new support area right now, but we are in the key support area that we've been in for quite some time. We did not see like a major fall like this one over here, like this candle, the black candle earlier that we can see from September. This was also the Federal Reserve meeting in September. So all in all, markets were volatile, but not like extremely as all investors expected. So let's put a new support level for the gold, just a little bit closer. Obviously 1750 still remains a good support level, but we're going to place a closer one to the candle that we seen drop yesterday. So I would place it over here. We'll be basically touching this area, and we'll be basically touching this area, even if we zoom out a little bit. 1753. Okay, and then if you want an even closer support area, we can place it somewhere over here, which is touching this area, and again this area. So yesterday we broke levels of 1760, obviously, and today we continue to trade between levels of 1764 and 1779. However, we're still in that key range between 1760 and 1800. But we did not see an upswing. We did see a drop, not really sharp, but all in all, the yellow metal did lose out momentum, especially because the Fed did as expected, and there were no surprises there. Even they didn't really decide on the pace. They said that the pace would be slow if needed or fast if needed. So it will be an accommodative kind of tapering from bond buying. From Asian markets, today morning we did see a slight correction as well. Asian markets are still weighed upon by the slowing growth of economies like Japan and China, especially in China, when we also have new coronavirus cases still spiking, and it's still really affecting markets in the Asian markets. Let's take a quick look on the euro to kind of see where we are. So obviously yesterday that the dollar didn't really get pushed higher. We didn't see the euro quite lose the momentum. It was a white candle, which means the euro was still in its key pace, and it's still in its narrow range between 115 and 116. We're still also moving sideways. So as for now, I would say in general markets are kind of on pause. They were very cautious ahead of this widely anticipated market federal meeting, but overall we are still kind of cautious, and there's still a little bit of a sell-off. You know, we're heading to Christmas. There will be a Christmas sell-off obviously before the holidays, and then we're going to resume with the rally again. One thing though that investors are worried about, that the liquidity program that the Fed was offering really pushed major indices like the Nasdaq, the Dow, and the S&P to a record highs. And now they're wondering whether this rally is going to indeed stop or not. So as you can see, this is the S&P still on a major uptrend. Even if we look at the weekly chart, especially for the past 2 months, we've been on daily record closes. The S&P and the Nasdaq on their 5th session of a record high, while the Dow is on its 4th session of a record high, 1, 2, 3, and 4. So now investors are still a little bit, yes, they are risky. They still have the risk sentiment, but it's a little bit of cautious mode just ahead of, you know, holiday sell-offs and so on and so forth. We also have oil prices correcting, obviously, where Brent is back to levels of $81. It did drop 4% yesterday, as you can see over here. This is nothing to do with the Fed, but more to do with crude oil stock inventories that are keep coming higher than expected. So let me just read the readings for you guys, so you know a little bit more about what I'm saying. So yesterday, the crude oil inventories were 3.3 million versus 1.9 million expected, and 4.3. So yes, it is lower than previous. However, it is still climbing, and we're still not seeing the draw that we'd hope to see, that for oil prices to reach all the way to $90 at a fast pace. Obviously, yes, oil. The long-term outlook is that it's going to go and keep climbing higher. However, we're going to see mild corrections just because today is OPEC Plus meeting, and there's some pressure on OPEC to increase output, especially that there's high demand in the markets with everything opening up again, not in China, but in the rest of the world. So we are seeing a little bit of correction on oil prices, Brent and WTI. Brent is back to levels of 81. I don't know if we have the WTI chart, and WTI yesterday we actually we hit a low of $78, but we closed at 79.3. So we're back to levels of 70s for WTI, which is a little bit worrisome for some investors that have a lot of stocks or shares in oil companies, or in just spot oil or in futures. So, but this is just a minor kind of correction, as you can see, because of the crude oil inventories that came out yesterday. So now all eyes are going to be on the Bank of England. We have the Bank of England handing down its monetary policy summary today and monetary policy report, with expectations of whether it's going to, we're asking ourselves this question, is it going to follow the Fed stance on correcting their liquidity program, or do they still need to inject, or maybe they will taper. However, it won't be like as much as the Federal Reserve. As well, today we are waiting for U.S. unemployment claims and the trade balance. These are really important key economic indicators that could affect the dollar stance. But overall, for oil prices, we also have the OPEC Plus meetings, so that should be really important as well. From the Eurozone, we're also waiting for the price purchasing index, which is the PPI. This is like the industrial production prices, and a little bit more data from the Eurozone as well, the French and German and Italian services PMI, which would give us a closer outlook to what is going on in the Eurozone, whether the economy is doing good or it's also slowing in growth, especially after the whole pandemic high kind of ended. Yesterday, we also had the ADP non-farm employment change, which was 571,000 versus 400,000 expected. So overall, it was a green. It was kind of a green or in the green economic indicator. So it didn't really do any, or like markets did shrug it off, obviously, because they were focused on the Federal Reserve meeting. However, market sentiment is quite boosted from that, the fact that the Fed did as expected and did not really have any surprises here and there, and that's why we did not see any sharp moves. So obviously the euro was paired overnight, hindered by expectations from the ECB to actually change its policy after the Federal Reserve. And we also have the sterling down from its week highs. So let's look. So the sterling yesterday, let's take a look. It hit a low of 1360, but we closed at 1368. And right now we're back to levels of 1368. We're trading according to that range. Today in the Asian markets kind of dipped down a little bit. Yesterday it was obviously higher on the fact that we have hopes that the Bank of England will do the same thing as the Federal Reserve. Anyway, guys, that was it for today. Short, plain and simple. I mentioned everything about currency markets, oil prices, and equities and how they are doing. Also, today we have Moderna earnings. So that could impact the health sector overall in equities. But that's it for today, and let's see for tomorrow a little bit of what we are actually waiting for. So today there's a few economic indicators that could actually make some volatile movements, but I think it's going to be a little bit calm, especially now that we're done with the Fed that was really widely anticipated. But we are waiting for the non-farm employment change. Now this one we can see or potentially see a sharp move on the gold. So anyway, guys, I'll see you tomorrow with more updates, and thank you for watching me.